Oh man, we need to talk about Ethereum, because with Ethereum now down over 75% from market highs, we are seeing staked Ethereum on the Beacon chain starting to decline rapidly, with over 80% of those staked and now in realized losses. What does this mean for Ethereum? What does this mean for the future of ETH 2.0 and the wider crypto space? We're going to delve into a whole bunch of on-chain metrics. We're also going to look at the Ethereum chart to look for key levels in the chart. So make sure you hit on the like button. Don't forget to subscribe. As always, if you want to buy any crypto, you can do so using BYBIT or BitGet. Links in the description to the two exchanges I use the most often. Also, don't forget to nab your free copy of my technical analysis chart patterns, free PDF guide, guys. I've made that for you guys to see all the regular chart patterns. You can print them off and you can put them on your desk so you spot them when you're making trades. Now, that's not what we're here to talk about. We're looking at Ethereum. We can see the Ethereum chart right now. It feels like a long time ago that we were up at about $4,800 here, chasing for that 5,000 mark. I remember it vividly. Everybody was saying Ethereum to 10,000 was just around the corner, and now you can see we have plummeted quite heavily here on Ethereum, as we have done for most cryptos, touching as low as 81% down, now sitting at about 75% down here, sitting at 1,171. But what I wanted to talk about was to do with the Ethereum Beacon chain. And I wanted to monitor the trends we're seeing here in the charts using some of these Glassnode charts. Now, what we could see was back in 2021, ETH was at an all-time high of $4,800 like we were just looking at. At that point, we could see that 8.02 million ETH was staked in the Beacon chain. Now remember, if you wanted to become a validator, you had to stake at least 32 Ethereum into the Beacon chain, and the key was that you could not take your Ethereum out until the merge happened, okay? But here's the thing. You don't know when that merge is going to happen, and we've already seen delays and delays. So people have uncertainty with their funds, and this is now starting to cause more and more problem because nobody knew it would take this long to see the merge happen. So we saw that sitting here at the 08 November, the 8th of November 2021, we saw 8 million staked into ETH 2.0 contract. Now, sitting at where we're at today, as of the 6th of July, just a couple of days ago, 12.98 million ETH was staked. Okay, so we can see that number gradually rising. But what I want to look at is what is going on, because currently this represents 10.9% of all Ethereum on the entire network is staked in the 2.0 contract. Now, interestingly, if you look at the value, so this is the dollar value, this has plummeted down heavily, right? As expected, the Ethereum price has fallen from $4,800 to the 1,100 odd it is right now, and you can see the total amount has staked has dropped incredibly. So in November 2021 here, you had 39, call it $40 billion staked in ETH 2.0, okay? $40 billion staked in ETH 2.0. That represented over 260,000 validators. Now, since this date here, more and more has plowed in to Ethereum 2.0 contract. More and more people have been putting that in. You've just seen that on the previous graph, right? More and more people were going in ahead and staking. But the value has fallen significantly by 25 billion. In other words, 65% of the dollar value has fallen, despite more Ethereum being staked. Of course, Ethereum is down 75% from its time highs. Now, as we progress, what we then see is this, which is the worrying sign, right? Normally you'd think if people, let's take a look at the definition. If people thought the Ethereum merge was coming closer and closer, you'd think that the number of ETH 2.0 deposits closer to the merge would increase, right? Because you're getting yield now for less period of time you're having to lock up your Ethereum. Therefore, you'd expect more people would want to participate to become validators. But as we're seeing, this has fallen dramatically. Okay, so throughout 2020, and this chart shows 2021 here, you could see it's very common to get over 500 deposits a day, and even many days where you had over 1,000 new deposits of 32 ETH per day. Okay, now look at where we are currently here. Look at this fall off here. This fall off has been very harsh, and if we even look closely at the bottom corner here where this circle is, you can see things do start to get pretty low here, with an average now of about 122 per day. Okay, so the 3rd of July showed 122 deposits of 32 ETH or more a day. We're talking from over 1,000 on many, many days. All of these days here, over 1,000, over 1,000, over 1,000, over 1,000. And now look at the plummeting. People are not depositing, and the risk to reward balance is not stacking up. And we're going to delve into why that's the case and what that means. Okay, now it's important to remember we had a whole bunch of trouble going on, right? We've covered that here on this channel. We had a whole bunch of trouble with staked ETH pair on the Lido network, and we saw some of the concerns happening around there. We know this all links into what was going on with after Luna and then 3 Arrows Capital and the contagion effect that caused a lot of problem and pressure on the staked ETH to ETH peg on the Lido contract. Okay, so we're seeing that a lot of people were panicking after that and they wanted to get out of here as well. Now let's then flick on to look at ETH 2.0 deposits and supply in profit. So this is now looking at how much of the supply is in profit. Now you can see the peak of this goes back all the way to Jan 21. So anybody who is staking Ethereum into the 2.0 contract from Jan 21, at the time Ethereum was at $988. Those people are in profits, okay? But as you can see, there's a tipping point that from this point, anybody who entered after about February, okay, of 2021, those are significantly in loss. And now you can see the purple line here has plummeted down to only 17% of people now in profits staking on Ethereum 2.0. So that is huge, okay? That's very, very important. And that is huge that this is having this is the impact we're seeing at the moment, okay? Now, the other thing I wanted to show you, I just wanted to pull this chart up. There was an interesting, this chart. This chart's really, really important. So what you can see going on here is ETH 2.0, so if you look at the realized price, so the realized price is when did you stake your Ethereum in the 2.0 contract? If you take that aggregated position, the average person who staked into Ethereum is sitting on a cost basis of 2,390 on ETH. So you can see they are heavily in a loss right now, given that Ethereum is closer to $1,100. If you take the average cost basis of the whole ETH network, the realized price is 1,670, okay? So you can see here that the people staked in ETH 2.0 are really feeling this right now. This is a big fall that they're feeling here to the downside, and that is having a lot of impact, particularly when the yield on ETH 2.0 is only about 4.2%, and only 17% of all people staked into ETH are in any kind of a profit. So this is causing a real problem now for the ETH ecosystem, and reality is you just need ETH 2.0 to come, and you can see this has continued to have a lot of impact. This is one of the reasons why so many people are playing around with liquid staking, right? We spoke about the issues with staked ETH. Why are people even using things like Lido? Well, the reality is the 4.2% yield they're getting when you're down so much staking in Ethereum is not enough to compensate them. It's not hedging their downside risk. So what you're finding people are doing is they're staking in ETH 2.0 into the contract because they want to become a validator, but they know they're going to have a heavy loss. So what they're doing is they're taking that staked Ethereum, they're trying to go then get that into the smart contract on something like Lido, so they get staked ETH token, and then they want to carry on get earning yield with that. And this becomes extremely, extremely risky. I don't like the concept of liquid staking. It's super greedy. You're already earning yield one place, and then you want to take that again and go earn yield somewhere else. And we've seen how that staked ETH pair started to peg really, really badly as soon as you had a couple of companies collapsing and people asking for their money back, right? You had a run on Ethereum. So we need to be very, very careful in this space. And for Ethereum, they need to figure out this merge. The whole industry is looking towards this. And I don't think this is going to be an Ethereum only problem. If Ethereum cannot figure this out, I think this could have wider contagion issues for a lot of the crypto space, particularly other layer 1 solutions as well. I think the ones who could benefit from Ethereum struggling are the layer 2 solutions, of course, and things like Loopring, things like Optimism, things like Polygon. Those guys would do well if Ethereum struggles and has further delays, because obviously they're the layer 2 networks. But longer term for the crypto space, Ethereum need to get this figured out, because people are really, really in some pain right there, and they need to get out. Now, obviously, if Ethereum price can recover, a lot of those guys will start to come back into profit, and that 17% of people who are in losses can start to see that come back. But right now, they're in a really tricky position where they're staked, they're losing money hugely, they're down hugely, and they cannot gain any yield, cannot hedge any of those losses while staked in the contract. Now, looking at the price, let's do a quick bit of technical analysis to see where we're at here on Ethereum. Now, we know Ethereum is just following the wider pattern here from Bitcoin. Bitcoin down 3.1% today, falling quite harshly. If I show you quickly where we're at on Bitcoin, it'll make more sense for where we are on Ethereum. So Bitcoin broke out the symmetrical triangle, which we looked at. We then saw us forming this descending triangle. Let's just get zoomed into this descending triangle, which I alerted you of earlier today. We broke to the downside of this descending triangle. And now on the 4-hourly, you want to see whether Bitcoin can hold its EMA ribbon for support. If it's able to hold its EMA ribbon for support and go try another break of this neckline, that'd be nice and bullish, right? Because then we can see, okay, can we get that break of the neckline? But the reality is you want to see, are we going to start coming back to test the neckline, the top resistance line and turn this into support line from the symmetrical triangle? In other words, are we going to get something like this? Remember, if you fall back into the triangle and you start losing the triangle to the downside, things can get pretty nasty pretty quickly, with a technical price target taking you as low as 15,000 here on Bitcoin, well lower than the 17,600. So equally for Ethereum, if we're looking at a similar trend here, if you lose this 4-hourly EMA ribbon, you could be not only going back down to test 879 here, but things could get even lower than that, which is only going to further compound the issues for those guys staked in ETH 2.0. I hope you guys enjoyed this video. If you appreciate this type of content on Ethereum and what's going on with the ETH 2.0 staking situation, then smash up the like button and subscribe. Don't forget to check out BYBIT and BitGet, links in description, and your free PDF in the link in description to get those cheat sheet patterns. Really useful for you guys to just print out, put on your desk. If you see it inverse head and shoulders, it's going to show you the patterns, what are the take profit levels, what are the stop loss levels, and what are your entry price points as well. Guys, go ahead, watch this video here, and I'll see you in the next one.